Hi everyone, welcome back to the podcast. In our endeavor to get through this book, we are on page 166 and Keshav says, Sir, you talk too much and too long and you're wasting a lot of time.
Sir.
I've come prepared. Let me first just talk, sir. Then you give your inputs. So based on that feedback from Keshav, he shall take the mic and then add in when Keshav asks me to.
Sir, I didn't say that. Our subscribers only request you to give live examples, which most of them can relate to that and understand the topic in a very deep way, sir. So that's why I took this Johnson & Johnson. He gives separate paragraph of Johnson & Johnson's company, sir. Like how the company did in the old days, sir. He starts it with a term called the one who doesn't know anything about a company, just buying shares, what they will do. If they see the stock price are coming low, they will think that the company is not doing well. They will try to sell the shares, sir. But as an investor mindset, we have to look what all the company is doing and whether it is also the buying opportunity for us to buy the stocks of the company or not. We have to look on to that, sir. That's how we looked at Johnson & Johnson. They issued an annual report, sir. 93 years annual report they issued in March 10, 1994, sir. On that, what are all the things he saw? He stated that, sir. The Johnson & Johnson's stock price dropping down steadily, sir, from that year. He went to see what is happening in the Johnson & Johnson's company. There he doesn't seem any mistakes or any flaws in that company, sir. Because fundamentally, the company is growing too good, sir. Because here he puts that in 1983, Johnson & Johnson have 77,400 employees. They made 7.4 billion products and sold that, sir. And in 1993, just 10 years span, they had 81,600 employees and they manufactured and sold products worth 14 billion, sir. That is twice the amount of products they manufactured in 1983, sir. So with just 4,600 employees added, sir. So fundamentally, the company is growing towards up only, sir. So there is no flaw in the company. Then he did some deep research. Then he saw that there came some healthcare scare. Problems, sir. That they're making some pharmaceutical products which can be come under the
new law from Clinton.
Yes, sir. That's why the whole sector got dropped, sir. But as a company, the Johnson & Johnson did well, and Peter Lynch gave a shout out to the company several times, sir, in the paper that you can buy this company. He states from $38, $44, but the company gave really good returns, sir. That's how he talks about this company, sir. That at the end of this concept, we have to know that if the stock price goes down, it doesn't mean the company is losing its value or something. We have to look what is happening really.
You must
there.
Investigate
What is really happening there. We can't be someone that the stock prices are going down, I'm going to sell the shares. That is not an investor mindset, sir. At every page of the book, it says this simple thing that you have to do your own research. Then only you come to know what is happening in the market and what is happening with the company shares you bought. Right. So that is what you happened here.
There's another famous story like this.
Yes, sir. That's what I want to ask, sir. When I told this that we want to smoke Johnson & Johnson's company, you told that Warren Buffett also had a similar experience with American Express.
Yes.
I know Warren Buffett, sir, but I don't know American Express. So you can...
American Express is a very old company.
Okay, sir.
They started in 1850.
Okay, sir.
Okay, in the US, in Buffalo. They're into financial products. So in 1963, they're a very well-established big brand with traveler's checks, which is a way of transferring money, and credit card business and financing they were doing. There's something they do is they give loan against collateral, meaning you give something, a security, and they give a loan against it.
Okay, sir.
Like a pawn shop. Right.
Okay, sir.
But on a much bigger level. So there's a guy who needed some money, so he told American Express in the warehouse, I'll leave soya bean oil, and against that you give me some cash.
Okay, sir.
American Express said okay, and they took it and they gave him cash, millions of dollars. Then it came to light that inside the barrel was not actually oil. There's nothing there. The barrels are full of water or something else. So this scandal broke out. So the American Express stock price crashed.
Okay, sir.
Warren Buffett, meanwhile, was unknown at the time. It was 1963. He's an unknown guy. He's a small investor. Okay, he saw American Express business model. He knew the American Express brand.
Okay.
He knew how people use American Express. And usually the American Express credit card, they're very famous, especially in the US. So he saw everything and he took a huge position. He put $13 million into American Express. He took a 5% position in the stake in the company, which was a lot of money. There was a 40% of all his money was now in American Express. That's the kind of confidence he had. A few years went by, the scandal went past, American Express turned around, business started thriving. It's still there in the Berkshire Hathaway portfolio, American Express. And he's still holding on to it. And he's been a long-term investor in American Express and has grown multiple folds. He's made huge profits from American Express. And he's been holding on to it. It's a cornerstone of his portfolio, is American Express.
So,
right. And he's one of the largest shareholders in American Express.
Sir, as you said, at that time he's just a small level investor. Then how can he put 40% of his whole
That's
thing
what.
into...
If you do your research, you do your studies, and you know the business, and you know the brand, and you're using the brand. He was using American Express credit card.
Okay.
Charge card. So he knew how it works. He knew how it works, and he knew the loyalty the customers have to that brand. Majority of their business was on card. It wasn't on financing. Not that warehouse financing. It was on
card.
Credit card was their main. Traveler's checks. The scandal was not regarding that. It was regarding American Express warehouse, which was a separate small division. But it spilled over on the brand. You understood?
Understood, sir.
It's like Rajnikant's distant cousin gets caught in some scandal. But just because he's Rajnikant's distant cousin, it makes news. It goes all over the news. Rajnikant's cousin. Till then, nobody knew who he was.
Correct, sir.
The two reasons why it made headlines is one is because of Rajnikant and because the cousin did something bad. But it's got nothing to do with Rajnikant. For a little while, he'll come in the news. Then Rajnikant will come and say, boss, I don't know who he is. Then after a few cycles, it will go away. But during those few cycles, everyone who's producer will feel nervous. They might want to cancel the deal.
Correct,
because
sir.
you don't know if the scandal, public will take what opinion. They might want to check out. Same way investors have knee-jerk reaction. Understand? Without even understanding American Express, they just read headlines. American Express scandal. American Express scandal. They don't realize it's a warehouse, what exactly, it's a small division, nothing.
That's what they
just say American Express scandal. You baba, sell. Not, especially those days, the information was even slower. Not like today with Twitter and social media.
You have to wait for one day.
Twitter and you'll ask 10 questions. Then back then, nobody knew. Only one newspaper will come. You won't want to take risk. No, you have all your money.
Correct, sir.
Especially if you're a fund manager, your wealthy guys will be knocking, ring, phone will be going off the okay, boss, sell. I don't want. If even the fund manager saying, Baba, don't worry. You'll say, no, you sell. I don't know. You don't know anything. What do you know? It's my money. You sell.
Correct, sir.
So Warren Buffett saw the opportunity. He knew it was safe. He put all his money into it, and he went laughing to the bank. And that's why it's still a cornerstone, and that is the philosophy which he's also talking about. You look at the intrinsic value of the company. When you say intrinsic value, it's like a trigger word for our audience. Immediately they'll say, sir, how do you calculate intrinsic value? There's no calculation in this.
Yes, sir.
See, Warren Buffett saw the intrinsic value, which is the American Express brand. You can't put a value number on it. You can't put a formula and equation and calculate it.
Correct, sir.
Like Johnson & Johnson, he saw the intrinsic value of Johnson & Johnson. He didn't look at the numbers. It's basically the philosophy of their business. How do they do the business?
Correct, sir.
Is that affected? That you can only know by reading and researching. You cannot put numbers in one calculator and calculate one number and say alpha, beta and say here's my intrinsic value. Here is the difference. You can't do that.
Correct.
You will only know that if you interact more and more. Like now you know me. You've been working with me for so long. We've been talking every day for so long. Now you know me. So now if someone asks, how is Vinod? You'll be able to say.
Correct, sir.
But without knowing anything, just one CV I give you and I go away. And someone asks you, you'll be like, I don't know. Some CV has given me. He studied here, he studied there. And this is all I know. What do you do with that? Will you lend the person money based on that? No. Warren Buffett knew all that. He knew he can take a position. That's why he put 40% of his money there. And he learned so much from that one deal. And he replicated that over and over again. That's what the famous Japan deal is also. Basically, with the American Express deal is a Japan deal. Where the Japanese country needed some investor to come who will infuse money into their corporates. So they told Warren Buffett, I'll give you free money. Take our money, which we're giving you free. And you put it back in our business.
What's your name?
Because of Warren Buffett, they trust Warren Buffett.
Okay.
Because of all this history, they trust him. They gave it him.
So if he invests, most of the people will invest on him.
Yeah, they believe. Because they believe Warren Buffett. Same reason why Anand. What is Anand sir saying? He said, do this. Now it's done. This is corrected by 2 rupees. What do I do? Anand sir said. I mean, so what Anand sir said? And especially we see some old video they would have seen 5 years ago, 3 years ago, some old video, some other channel. He was passing said something. He said that day.
Correct, sir.
You'll be like, boss, what is the context? 3 years ago, some news item, something. That's why whenever someone says Anand said this, I'm like, tell me which video. Simply like, wait, some video, sir. And then I see some old video. So learn to do research, learn to read, learn to take notes.
I will do it.
Still not taking notes.
Sir, I will do it, sir.
Yeah, sure. Anyway, thanks guys for joining us today on the podcast. I promise to keep it brief and not to drag it out because Keshav has many important things to do.
Sir, no, sir.
He's going on his holiday.
Sir, I didn't say anything.
So, wish Keshav best of luck on his holiday. He might come back with a Mrs. Keshav.
Sir, no, sir. Just going for a function. That's it, sir.
Yeah.
Yes.
Keshav's function. Wish him best of luck. Thank you guys and see you in the next one. Bye.
Thank you.